Welcome again, AI Crypto Squad, to another exciting episode of AI Crypto News at Night, where we bring you today's latest and greatest news in the crypto space in just 5 minutes or less. But tonight will go a little longer than usual tonight. So, let's get into it. Is BRC-20 destroying Bitcoin? Well, it's no secret that Bitcoin's technology is hella ancient, even from a crypto standpoint. And with the deployment and minting of BTC Ordinal Meme Coins through BRC-20, the Bitcoin blockchain is getting slower than a snail on sleeping pills. But to be fair, Bitcoin was never intended to be the blockchain to be building on. It was only built as a store of value for self-custodial banking as an alternative to traditional legacy financial systems, and really not for development pertaining to minting new coins. Furthermore, BRC-20 cannot accept transactions, so it's pretty static per se, which is a big drawback for blockchain technology. Now, the only reason why developers now have this sudden hard-on for BRC-20, well, it's because of Bitcoin's brand and liquidity. But the fees are insane, even in this bear market. Imagine what the fees will be when BTC is over 100k in the bull market. It's a scary thought, isn't it? But fear not. Bitcoin's Layer 2 solution, the Lightning Network, is a solution to all these woes. As transaction fees continue to become completely out of reach for most, you can expect a shift from BRC-20 to the Lightning Network. And while we're on the topic of transaction fees, Bitcoin miners are happier than a pig in shit, as they are raking in these high transaction mining fees. But don't get too comfortable, because the shift to the Lightning Network could shake things up in the mining industry. So there you have it, folks. Will BRC-20 be a thorn to Bitcoin? Maybe a little for the short term, and that's about it. So let's enjoy the ride and hope for some comedy relief to get us through these high fees and slow transaction times. Next up, despite all the madness with Bitcoin, well, the Bitcoin fundamentals still remain extremely strong. The BTC supply held on exchanges has fallen to 5.84%, which is the lowest point in the past 5.5 years. This is a clear indication that fiat currency and the legacy financial systems are on the brink of collapse, and people are losing trust in the financial system. Bitcoin, with its decentralized and transparent nature, is emerging as the best hedge against inflation and financial instability. As we have seen in the recent past, the central banks have been printing money at an alarming rate to boost the economy. This has led to the devaluation of fiat currencies, causing inflation and a loss of purchasing power for consumers. Bitcoin, with its fixed supply and deflationary nature, is emerging as the most viable alternative to fiat currencies. The falling supply of Bitcoin on exchanges is a clear sign that more people are choosing to hold on to their Bitcoin as a long-term investment and a hedge against inflation. As the demand for Bitcoin continues to increase, the price of Bitcoin is expected to rise further, making it an attractive investment option for investors. So in conclusion, Bitcoin's fundamentals remain strong, and it is emerging as a reliable alternative to fiat currencies. The decreasing supply of Bitcoin on exchanges is a clear indication of the growing trust and confidence in Bitcoin as a store of value. And lastly, Bitcoin and Ethereum, well, they're down 3%, and top altcoins are also taking a hit. So what's causing this downturn? Well, after a period of high Bitcoin fees that had people scratching their heads, the fees have finally subsided. On the flip side, that has led to delayed selling, dragging down the prices of Bitcoin and Ethereum and other altcoins. Bitcoin took a 2.8% dip in the past 24 hours. It went from a high of $28,280 to a low of $26,851 at the time of this recording. Ethereum, the second largest crypto by market cap, also joined the dip party with a 3.3% drop, currently trading at $18.18. The whole crypto market seems to be in sync with this sell-off. Major and minor altcoins are experiencing some red candle moments as well. Even popular ones like Cardano, Dogecoin, and Polygon are all down in around the 2.5% range. So why did this sudden drop happen, you ask? Well, there could be a few reasons. Firstly, the high Bitcoin fees we witnessed recently prompted delayed selling from market participants. It's like they were waiting for the fees to cool down before making any moves. Secondly, the news of April's inflation numbers coming in lower than expected might have caused a frenzy among investors, leading to some panic selling. And lastly, when Bitcoin dips down, the other altcoins tend to follow Bitcoin's lead, imitating its price action, but with even bigger swings due to their smaller market caps. As I mentioned time and time again, it's discount season, fam. Buy this dip and apply a good dollar cost averaging strategy. Not financial advice though. Well, that's all for AI crypto news, and thanks for tuning in. If you enjoyed this newscast, please like, subscribe, and share it out. And what are your thoughts about this whole meme coin BRC-20 craze? Is this sudden meme coin season here for the long term, or will it just fade away, leaving many holding worthless bags of shitcoins? Go ahead and leave your comments below. And as always, take care and stay blessed.